let's keep our attention on financial markets and everything that's been happening there, not just in the last couple of weeks, what's happened this year, what to expect for next year. Joining us now for that conversation is Tim Chubb. He is the CIO over at Girard. Tim, great to talk with you this morning. I'd love to begin with risks that you see in the market as it relates to sentiment. I mean, Bitcoin is certainly a part of broader financial market sentiment. And we were talking to Randy Frederick of Schwab earlier. He's talking about, the put-call ratio is all out of whack. How concerned are you about the setup as we head into the beginning of next year?
Yeah, thanks, Miles. I'm fairly concerned. I mean, we definitely have seen a lot of speculative, euphoric type behavior within the last, several weeks, and really coming out of the election and some of the positive vaccine news. Value trade has been very hot for the last 6 weeks or so. But it's just one of those things where you look at the put-call ratio, look at the number of stocks that are trading over their 200-day moving average. At some point, you're going to have a shift where everyone needs to run to the other side of the boat, and obviously that's going to, cause quite a bit of market volatility. I just think there's a lot of headwinds for stocks in the short term, and while the backdrop and fundamentals for the long term and the second half of next year are extremely positive with the economy normalizing, I think everything from money supply being a risk for inflation potentially next year to just the broad valuation overall for the market. And as of course, we are seeing a lot of sort of speculative behavior in certain stocks that are certainly a cause for concern as well.
Hey, Tim, it's Julie here. And so if that's your view, is there any place that you're going for sort of protection in this market, or something that you think is going to be more resistant if we do start to see a pullback?
Yeah, so I think for us, we're rebalancing right now. We're maintaining our asset allocation for our clients and taking some money off the table. If we do get a pullback, we don't think it's going to be something where it's a bear market or even a decline like we saw in March. Will likely be a routine pullback. But unfortunately, I think a lot of the more safety bond proxy sectors like real estate, utilities, staples, unfortunately next year are likely to be not great areas to invest in, and likely to be an area where we may underweight, just because of how sensitive they are to rates moving higher. They don't have as much pricing power, lower growth, et cetera. So for our clients, I think, rebalance into fixed income, especially on the credit side of things. I think if we do get a pullback in equities, credit should hold up a little bit better than, equities overall. But we really like healthcare going into next year. We could head a little bit of a speed bump depending upon how the outcome in Georgia in early January turns out. But you have a sector that's, really faced with a lot of nice secular growth tailwinds related to an aging population, pricing power, a lot of M&A activity that's trading at 17 times forward earnings for 2021 compared to the S&P at 23 times forward earnings. So I think that's a nice place to hide out, especially given the secular growth backdrop and how that sector, I think, checks a lot of boxes from growth to value, quality, and everything in between.
Tim, we haven't had this discussion for a while on the show. It's discussion a lot of times in the summer, the V-shaped recovery. We have the vaccine now getting out there. You have a stimulus deal potentially this week. Do you think that those two things, you combine them together, especially with the Fed liquidity continuing to run rampant, we might have that V-shaped recovery in the first half of next year?
I'm not so sure about it taking place in the first half of next year. I think if you look at the Fed, real GDP now forecasting for the fourth quarter continues to move a bit lower. I think we have a lot of dark days ahead of us due to COVID-19 cases here within the next month or two. So it's going to be very difficult. And I think maybe a little bit of a larger or wider range of outcomes for, the first, half of 2021. But to your point, I think we are going to have a pretty significant recovery end of the second quarter of next year, especially depending upon the level of vaccination that our country is able to achieve. And the second half of next year in 2021, I think will be extremely rewarding for investors and Americans who are just looking to get their lives back. And so as a result, I'm pretty optimistic about the consumer discretionary sector, especially in durables and cosmetics and really anything that is exposed to the American financial position, which I think despite what we've gone through this year, not to be insensitive to those Americans who are really struggling right now as we face further lockdowns, but I think it's a sector that really rebounds quickly given just how low debt levels are on the American balance sheet, and being that there's a lot of pent-up demand, and I think all of us are looking forward to taking vacations and getting back out there again. I think the reopening trade and to your point, the V-shaped recovery for the second half of 2021 ultimately will be positive for some of the reopening value-oriented names that we've seen move in the last 6 weeks.
And Tim, let's just finish up with thinking about some of what's happened in the last few weeks. Again, we kind of began the segment talking about Bitcoin, but we've seen what's happened in the IPO market. SPACs are going nuts. Sentiment right now is at an enthusiasm level that I don't know what you would compare this to, but we've heard comparisons to a lot of other periods that were quite frothy in market history. How are you thinking about that? Is it concerning to you? Does it feel like it might lead to a broader mania, or are you okay saying, look, if everyone wants to get excited about electric vehicle SPACs, have at it? I think, consumer discretionary is still going to be okay in that environment.
Yeah, I think there is a extreme level of optimism right now, especially in the face of, some of the negative news related to, shutting down the economy in certain areas, as well as the COVID-19 cases rising. But I think it underscores the exciting environment that we're heading into in this new economic cycle. I guess to answer your question, in the short term, I do think we're going to have a moment where everyone runs to the other side of the boat, and it could cause a bit of a pullback and some volatility within the markets. But I think if you zoom out, I think investors are really looking long term. And while the valuation of some of these companies really doesn't make sense to us, and I know I call them traders as opposed to investors, just buying a narrative as opposed to a business and the underlying fundamentals of that company. But I think, especially with the Biden administration coming in and the news yesterday with the energy secretary and the opportunity that exists for alternatives, we have some large secular growth tailwinds that are really exciting. And for the last 12 or so years now, population and productivity growth have been extremely low. We're now entering a phase where population growth may be picking up due to millennials entering their peak household formation years, and productivity growth certainly picking up as we've seen so much disruption take place and accelerate during 2020. So, the optimism's warranted. I don't know to the level that we've seen, perhaps. Again, it's been more people trading off narrative as opposed to the valuation of these companies. But there's really a bright future ahead of us, I think, in this next decade. And once we can get through, the COVID-19 crisis, I'm really looking forward to seeing what our U.S. economy can achieve in the coming years.
All right. Tim Chubb is the CIO over at Girard. Tim, always great to get your thoughts. Have a great holiday, and we'll talk to you in the new year.
You too. Thank you.